Good day all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for Monday, the 3rd of August, 2020, about 5:45 p.m. in the afternoon. Got to be ready that we're in these dog days of summer. Volume's going to lighten up on you. We still have this week reporting, well, we started off with about 170 companies in the S&P 500 still yet to report. That number's obviously dropping each day. It's interesting that more and more companies are starting to give forward guidance. So beating or not meeting that guidance comes into play for the next quarter. Got to keep that in the back of your mind as you trade. A mixed day with one exception. XLK, QQQ. The tech stocks still reign supreme, and until they don't, you have to assume that they're just the ones there, and that's where the market's going. And we keep seeing more bankruptcies happening in the retail part of clothing and so on. That's going to be a norm, and I think you'll get a lot more of it right after Christmas. Now, you'll say, what's he talking about Christmas? And you should, but we're in August already. So if you can hold out, you do. See what inventory you can clear for Christmas or what goods you can move. Cross your fingers. Maybe there'll be a COVID situation. Things will change. But the problem is the hanger-oners. That's the problem for them. And there's a number of them. You know the names. So let's go to the chart action. XLK, a gap up, and it never looked back. But that's an important gap, and I'm going to show you why in a second. The pattern without this was like this: higher lows, higher highs. This is swing line. A swing line is unique to what I do. It's in the charting software that we make available for our clients. And it's a study that I wrote many years ago. It's got to be now 20 years ago, easily. And it defines trend and the risk associated with the trend. And what do I mean by that? Well, if we take a look, I now know that if you take out this low right here of 105.60, I break the pattern of higher lows and higher highs. So if one were to buy long right here on the close 110.43, they have a risk back to 105.59. It helps me define risk. Helps me to see that the trend is up. I filter it with moving averages. I use the 18-day moving average of closes. And I know before you write me, why not the 20, the 21, blah, 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 because I want to. And after 51 years of doing this, and after buying services that optimize these moving averages, I came to this conclusion, for the way that everything I put together, this is the bellwether for me. And so I stay with that. That number in itself, when you're under it, when you rally to it, is resistance. When you're above it and you fall to it, it's support. What else do we see on this chart? Clear as can be. What do you see? I'm going to take off today's action. We were talking that when we were getting this break, I said, got to be careful here. This market, if you look at it, each time it's done this, it has come back and made a higher high. You don't believe me? Go on YouTube, take a look at it. Now, take a look at what just happened. Here is the marketplace, and here's today's action. Where I go to school, that's a higher high. Am I surprised by it? Not even 1 ounce. Not remotely. I can see what it's doing. The trend was up, and the market gave a jump. What surprised me is that you managed to close up and over the upper Bollinger Band. The market has been faltering each time it's hit that number. I think you see that. So, can it stay over it and say, hey, I'm breaking out and I'm going to run? Or was this one of those moves on a Monday that you get a big rally, and as Yale Hirsch wrote in the Stock Trader's Almanac, big Mondays lead to reversal Tuesdays, be it on the upside or downside. So an upside Monday puts pressure on the market to stay up on a Tuesday as his thing you look for. I agree. I've used it for years and I see it. Does that mean you fade it? Never. You put it into your bank of knowledge that, hey, if I'm going to be a buyer, first, I don't ever recommend buying over a Bollinger Band. Second, I look at it, okay, we had a big Monday, maybe we'll get that Tuesday. What else do I look at? We're overbought. But when markets come out of sideways action, and I think you'd agree with me, this is pretty much sideways, to break out above or below a Bollinger Band, you're going to get either overbought on the breakout to the upside or oversold to the down. That's normal. So getting this market overbought is no surprise. The question is, What does it do with it? It's tweaking more and more interest to the bull side. No question in my mind. Trend up, bias up, ahead of itself, yes. In SMH, well, where XLK goes, how far behind can SMH be? It's still the US Semiconductor 25. It's not all the tech stocks, but it's important. It's following suit. Different than it just glued itself to this upper Bollinger Band and it's not giving up. That's a powerful sign. Yes, there can be breaks, but now the 18-day average is above the last break low. So it gives credence to those that want to be a buyer saying, oh, this market might be doing more. What else? Both numbers that make up the slow stochastic were over 80 today. They were over 80 on Friday and Thursday. That means they're embedded. Until the red line closes under 80, I fully expect that as long as the market doesn't first get up, make a higher high, and then drop back, that if it were just to drop, the buyers are going, give it to me. I was a floor trader. Give it to me. I want some action here. Throw it to me. I'm going to take it. That's what I expect to do it. In the XLI, the market, lower highs, lower lows, right into that line in the sand. Also, it's pretty much sideways action. The telltale problem is you lost your bullish momentum. And when you lose an embedded reading, where these numbers, as I said, are all going sideways, and you lose it, and here you lost it. You lost it on Friday. It is very typical you get to that 18-day average. Unfortunately, you did it all at one time, and you can see the market just sort of hanging there. Resistance, very evident at the 200-day moving average of closes. I pointed this out. This market's really looking at that. When it eventually gets over it and stays over it, we may enter a whole new phase of bullishness in the market. Yeah, bullishness. But right now, that's your resistance point. On the energy sector, you're in a downtrend. Lower highs, lower lows, under the 18-day average. But that 100-day average, it's been very important to this market. You pay attention to it. So I think the pros did some short covering against it just now, and they have been, in my opinion, short for all the right reasons. And the question is, can it get to 34.76 or does it stall out there? QQQ. There should be no surprise in your mind that you look at the Bollinger Band, and if you rally, that's where the market fights a battle. It's done it here, it's done it there, it's done it here. Don't be surprised at it, but it is so much stronger than all the other indices. It just keeps going. It's like the ever-ready battery. I love the rabbit. It never stops. It doesn't run out of juice. Well, that's what this market is doing. This is the one you keep in your back pocket when you're looking to buy if there's questions. Until it changes, it hasn't changed. The emerging markets, no. We talked about this last week too. Number one, I see a pipe formation. That's when those Bollinger Bands just go sideways and you're in it. And you often get frustrated in those moves, getting the picture back and forth, no real follow through, no breakouts one way or the other. Gold is still bullish as can be. Why? GLD still has the embedded reading. Lose it, and I'll lose my enthusiasm. Don't lose it. I say that on these pullbacks, the pros are buying. What you did for the first time is you're actually in a consolidation. Notice how the market was riding the upper Bollinger Band, first staying over it for many days, then came back to it, got back under it, and now you're just going sideways. This is still a healthy bull market. Yes, you can have a problem and will have a problem if the red line closes back under 80, but it hasn't. And that tells me on these pullbacks, I think the traders are looking to be a buyer. In my afternoon Spider ETF video for subscribers, paying subscribers, there's another moving average I teach you in that, where I think the pros are buying against. You want to see that. How do you? Go to our website, sign up under the word research. www.iraepstein.com under the word research. Really inexpensive, $8.95 for 30 days. You tell me what you think, because that's where I say I want you to buy here, sell there. Here's your objective. Here's where I'm wrong. I throw so much information at you, and I cover 35, 36 charts doing it, much more than you get here. And here I'm never going to tell you I want you to buy here or sell there. That's where I do it. In GDX, what's the pattern? Well, neutral. You're over the 18-day average, so the bias is up. The swing line is down because you have lower highs and lower lows. Momentum is down because you lost the embedded reading, and when you do that, prices often make a move back towards the 18 or hit the 18-day average of closes. Now, even if you rallied up through 43.03 to turn the swing line up, it would give you higher lows, higher highs. You'd still be overbought. You still have not completed a down move. I'm not in love with this chart. TLT. All the market did, and it's been doing it, it gets to the Bollinger Band, backs off, gathers itself, goes to it, pulls back, comes back to it, gathers itself, lose the embedded reading. Get that red number to close under 80. I'll say that we're probably going back to the 18-day average. Don't lose it, and the surprises are to the upside, not to the downside. Last, FXE. You broke down today to 110.31, just under the last break low. So for the first time, this whole phase is over. The very first time. So that monster run that began here at the 106 level, that's what I'm going to say, culminated today on this at the 111 zone, and now it's pulling back. It needs to consolidate and figure what next. The bias is up because you're over the 18-day average, and you still have the embedded reading, but you've gone into a bit of that. Surprises? Well, unless the red line closes under 80, any surprises I think that'll come will be to the bull side. Close under 80, the game changes. Want to remind you, here's the news for tomorrow. You get the factory data orders coming out at 9 o'clock. They're looking for a 5% month-over-month gain. The New York ISM is going to come out tomorrow, and that comes out at 8:45. These numbers are still under 50. They're not powerful. You need them over 50 for expansion. ICSC and Redbook Group retail sales come out in the morning. They've been okay, nothing super stellar. Treasury's going to come out. Well, actually, it came out this afternoon, and it said in the second half of the year they only need to refinance $2 trillion. And I say that facetiously. Whoa. And the petroleum stocks for Wednesday morning at 9:30, they're looking for a net draw in the neighborhood of 2 million barrels, but we do get the API numbers out tomorrow. So remember that. You know, there's a lot of you that like to trade these spiders ETFs that are based on futures. And I'm not sure you're aware of it. As a futures firm, and that's our primary business, you know, we're not stockbrokers. We don't try to be. We're not. But we write about what's underlying your ETFs. And believe me, it's futures in many of these cases. So our news, when it comes in, fits right into the areas you're looking at. To get it and take a look at it, it's simple. Go to our website, www.iraepstein.com. Under free offers, you'll see it on the right-hand side. Click that, choose what you want. We'll put this into your email box. You get about 2 weeks of it. And you can also choose which areas you want to get info on. You're going to, I think, find it interesting. It's very technical for you guys that like me. And for the fundamentals, we also write about that. Options trades, it's covered. We've been around a long time. I think you'll find it interesting. I'm Ira. You have a good day. I'll see you tomorrow.